everyone. My name is Phil Blancato, and I'm CEO and President of Latimer Talman Asset Management, Chief Market Strategist for Osaic. Welcome to another weekly Market Impact. Well, spring has definitely sprung. We got through the spring equinox, which you know me, I'm a big fan of the solstices. And I happen to be down in Georgia. And sure enough, I was expecting to be in 80-degree weather, and I get down there and it was 50 degrees on Saturday night, so not super warm. And the best part of this story is I'm walking around downtown Athens with my daughters, and there's formal season in Athens, Georgia, because I went down to see the girls this weekend. And sure enough, all these young ladies who are going to formals, guys in tuxes, are in these thin little white dresses, they're multiple color, mostly white for some reason. And then they were freezing. It was the funniest thing. I'm thinking this winter never wants to end. In fact, if all goes well this Friday, the markets are closed. I might go skiing on Friday. Why not? Ski in April on the East Coast. I hadn't done that in a long time. So we'll see. Hopefully you had a great weekend. Hopefully you did some fun basketball. And for all you basketball fans out there, I tried to watch some Final Four. I'll get into it a little bit later, but this was a big weekend for my daughters. They're a part of the Miracle Campaign, which is a fundraising campaign at the University of Georgia, where they raise money for children's health in the Atlanta Children's Hospital. It's a tremendous campaign. To the credit to the kid, they raised over 1.4 million, a new high for the organization. And there were lots of young handicapped kids that were there. I'm very, very proud of the ladies. I get the question a lot. I get resumes all the time. People want to do what I do for a living, and I love helping young kids. I'm always bringing them in to shadow me and the team. We're always trying to do things to help kids, understand what I do for a living. But I get resume after resume, and they all have these wonderful GPAs. Some get fancy, they put in core GPA, which means they probably party too much. And they all did something in an investment club. But you know what? If for those of you listening, if your kids want to get a good job someday, and I don't know if it matters what industry, they've got to do more than just get good grades. And I get kids that are athletes. I'm a big fan of when there's an athlete on a resume. I get kids that maybe did some extracurricular work, which always helps. But when I see someone who did volunteer work, where maybe was a president of an organization, even if they're only in a fraternity or sorority, but took a leadership role, you have to have something on a resume besides just being a good, smart person. And to my daughter's credit, both of them, they both have been involved in Miracle for a long time. And the 500 kids who are part of this thing or so that spent the better part of a year getting ready for the culmination of this event says a lot. At a time, I think we all get a little bit, distressed about headlines and media. I know there was a gigantic rally this weekend. I know King's rally, and I give people credit. If they're passionate about politics, awesome. But there's just a little angst in the air. We got two wars going on in the world. And then I watched all these kids who were raised all this money. They were sobbing at night. All these handicapped kids that were there. There's still a lot of good in the world. So I'm very proud to go down to Athens this weekend. And while it was cold, we did have a great time watching. And I'll talk a little bit more about it later. Kind of fun that I did watch the end of the UConn Duke game. Now, this is a tough one for me. Now, I'm an East Coaster. Danny Hurley is a New Jersey guy, big fan of the Hurley family, what they did for New Jersey basketball. So I was pulling for UConn. But I met Mike Krzyzewski once, and Mike Krzyzewski is just this incredible guy. And at the core of Mike Krzyzewski's coaching philosophy, obviously now retired, was that he treated his team like family. And if you know me as a person, I'm a family guy. I love having big network, big social events. Everybody helps each other. And that's how Mike ran that team. And I think that legacy still is a trend in Duke. So I didn't mind if Duke won, but that shot at the end of the game to win, my God, I was watching. I couldn't believe what I saw. My God, incredible. So hopefully you did something fun this weekend. In a minute, I'm going to bring on a friend of mine, Mark Eibel, is going to talk from Russell Investments. I'm going to bring him on in just a second. Just a quick market update. I'm sure many of you are getting stressed about what's happening out there, and you shouldn't be. First of all, corrections in markets are very normal. In any one year, we get corrections of 5% at least 3 times. We generally get one of 10%. So if you're in the NASDAQ, you're right there. You're right about, as of Friday closed, down 9.73%. Believe it or not, large cap growth, just that segment of stocks is clearly in a bear market territory, down 12.6%. I've been a big fan of small caps this year. They're only down 1.05. Now, if you look at the peak of where they were to where they are, that's almost 10%, depending on what type of small caps you own. So the market's under pressure. The S&P 500 down 6.68. And even the bond market, a place that's been a safe haven so far this year in the last week or so, because of inflationary fears, because of potential that oil, higher price of oil would spur inflation in the United States, or worse yet, cause something called stagflation, which is where prices go higher and growth stays flat or goes down, probably flat. So that has put some fear into the market. But factually, $100 oil for a couple of weeks isn't going to punish the world. Does it make things difficult for a little while? Sure. Let's not forget seasonality matters, right? We're at a time of the year where, we're not using as much oil and gas because we're going from cold to warm. We're in that in between. We're not driving yet. Easter's a pretty big driving week for those who are Christian. I'm a Catholic. I went to Palm Sunday Mass down in Athens, Georgia. It was quite cool. I make palm crosses by hand. Been doing that. My father taught me how to do that as a kid. So we weave probably, I don't know, 30 or 40 of them from the palm crosses and give them out. But my point is, it's a time of year when we're not doing a lot of that heating and cooling. By the way, if you want a palm cross, shoot me an email and I'll send you one. But anyway, my point is, I think you have this scenario where it's not terribly impactful, the higher price of oil yet. If it stays this high, probably much more so. And Mark and I will talk about that in just a minute. But so far, markets have had a pretty tough go. We're going to end the first quarter negative. It looks like we're going to have a pretty good day today with just a couple of days left here. And usually this week is a spring break week. So you may even see, excuse me, sorry, you may even see that the week is a bit muted, but of course the headlines matter. Is there a negotiation that's going to come through? The president tweeted this morning that Iran is active in discussions. Let's see. I don't know that every day is a new announcement or a new tweet. Point being, markets have had a pretty tough go. The most important thing is you don't panic. This is not economic yet. If it becomes economic, we're going to have a very different dialogue. Right now, that's not the case. So I think we got to kind of not get too worked up about it. But I'm excited to have my guests on today. We're going to get into some of this. There's one headline I read about, one research report I read over the weekend, which I thought was very cool. You could argue that energy is at its core the reason why markets have been so volatile. And oddly enough, the only area of the market that's up for the first quarter, pretty much the only area, is going to be commodities, up over 23% for the first quarter of the year. We've talked a lot about how I like commodities this year. I think in the grand scheme of a super cycle in commodities, we're just beginning on that. Meaning the world's going to need a lot of stuff for many years to come to rebuild power grids and start new power. And everything else was pretty much down. Emerging markets ended up 2.7%, REITs up 1.8, and everything else pretty much down, depending on what asset class. But I did read a piece about batteries. And we don't talk a lot about this, and I'm going to have an expert on about batteries later on in the year. But over the weekend, I read a piece about a company who's come up with, it's really quite fascinating, and I can't help but go over some of this data. Mark, I don't know if you saw that. We'll get into it in a minute. The company's called Donut Lab. Interesting name. And just to give you an idea, I mentioned this in a prior podcast, solid state lithium batteries, if it really is a thing, if it really is a pot, but that it exists. Now, this is the Finnish company. There are two American companies that their names escape me right now that have also developed solid state lithium batteries, where today everything has a liquid in it. There's acid in a battery. These don't have that. So the Donut Lab battery, here's some stats for you. And if this is real, I mean, it's an absolute game changer for how we get our power, and we'll all be in EVs in no time. Right now, you can get 100,000 charges out of one battery. Think about that, 100,000 charging cycles. It can charge in 5 to 7 minutes. It does not degrade its power until you get to negative 22 degrees Fahrenheit. Are you ready for this number? 870 miles estimated driving size for a mid-size EV. So a mid-size van gets you 870 miles on one charge. Zero rare earth minerals, no rare earth minerals whatsoever. Up to 56 billion in potential market growth and how it would change. 44% of this type of battery would immediately go into every existing EV around the globe, meaning eliminating all existing EV batteries pretty much. And 400 kilowatts, if you will, is the average. If you think about what this thing would do, it's basically, from a price standpoint, would be about half the price of everything else. So my point is, when you see these kind of announcements, and I read this piece on it, really is fascinating that a solid state lithium battery could be a complete game changer in how we get power. So with that, I'm going to bring on a new guest today, Mark Eibel from Russell Investments. Sorry, Mark, for my long intro, but I do that each week. How was your weekend, Mark? What'd you do? Anything fun?
My weekend was good. I watched a lot of basketball. Also watched that unbelievable game that you referenced, the UConn Duke game. Being a West Coast guy based in Seattle, kind of pulling for Arizona. Still, the old Pac-12 kind of heritage, kind of rooting for the West Coast to continue to represent. And baseball season started off. So one of the few times in my 50 years here, it's exciting to be a Mariner fan after how we did last year. Got within 8 outs. So it's kind of a sports weekend for me. So yeah, it was nice.
I actually have a soft spot for Seattle. I remember the Edgar Martinez days when he was such a great player. He used to kill the Yankees. Oh God, he was such an amazing, amazing player. I'd love to see Seattle win. I was sure when you guys won the Super Bowl. I was very excited for Seattle to win the Super Bowl. I think that was very cool. Yeah, I like that city. I'm an oyster fan. I love going out there and having fresh
It's a
oysters.
good place for that.
No doubt about it. Mark, tell me a little bit about yourself for the folks who are listening today. What do you do for a living, and maybe what your expertise is in?
Yeah, I have the most boring bio probably of any guest that you're ever going to have.
It's
So
not true. No way.
I started Russell Investments as an intern, going to a local university by Tacoma, Washington, Pacific Lutheran University back in the mid 80s, and 41 years later, I'm still there. That's my whole bio. So I started in operations. I actually started as an intern, just trying to cover pizza and beer, like I think most interns do. Never dreamed I would be there for 40 plus years. Started in operations, moved to research, was involved in equity manager research for 20 plus years. And for the last almost 20 years now, have done this. I meet with a lot of particularly retail investors and advisors and talk about all things Russell, all things market, conferences, media, get to travel this great country. It's an amazing country, coast to coast, and with lots of different views all in between. So I've been blessed. The firm's given me the opportunity to change jobs over the years without me having to change firms. And if I could be one of those rare people that starts and ends their career at the same place, I think I will take that. So that's my story, and it's a real privilege to be on your show. Thanks for the invitation.
I appreciate it. That's an amazing career, buddy. Stay at one place. You and I are somewhat similar. You got me beat. I've been at Ladenburg for 22 years, 22 years. My entire career spans 36 years. I'm in my 36th year, but only three firms in 36. So I agree with you. I think we're dinosaurs. I don't think anybody does that anymore.
Yeah.
What is the secret to your success to go from where you start as an intern to this very prominent role? You're on CNBC, you're on Bloomberg, analyzing markets. I understand when the firm needs someone to kind of calm people down and explain where markets go. Your biggest events of the year, you're the headliner. So obviously you know your stuff when it comes to markets. How did you get here?
I think I always joke that it took me 20 years to be an overnight success. It's kind of the line I think about. I look at the different roles and kind of that career that I mentioned. Each one of them was a building block of I learned a lot of things in operations just on the behind the scenes, how things work, how performance is calculated, all that type of things. I learned a lot, obviously, in manager research, researching money managers, some of the brightest minds out there of how do you want to run money. Had great mentors along the way, and I really enjoyed talking to clients. But the talking to clients part came much later on in my career because I needed to build the knowledge base first. So you had mentioned the skill sets and the volunteering and the great work that your daughters are doing. I would add public speaking onto that. I took a speech class in sixth grade. My sixth grade teacher made us stand up in front of a group, and every week we had to give a 60-second speech. I've never had a fear of public speaking, and I didn't know until years later that that's one of the number one fears that people have. So I built this skill set, and then I got into a role that I think emphasized my best skill, I think, which is maybe my only skill, which is communicating to clients. So to me, it was just the building blocks of a career to get to the ultimate position that I think utilized everything that I learned along the way. And I think I'm one of those rare people, maybe in the world. I think you are as well too. Just found my niche, and I love my job, and I love coming to work every day. And after 40 years, I still want to come to work every day. And man, if you can find that in life, it's pretty special. And I think I found it. I think you have too, it sounds like.
Yeah, I couldn't agree with you more. It's funny how similar you and I are. When my kids were growing up, I said, you do your best for your grades. Whatever you get, you get. I had no problem with it. But the one pass I never gave them on was public speaking, because from little kids, especially Marcello, who's a bit of an introvert, It's funny. She was the six-time student class president, and her senior year gave a speech at graduation. My dad had just passed. Not only did she invoke my dad in the speech, talked about him fluently, and got a standing ovation at the end because her speech was so powerful. Because public speaking, to your point, is critical. You do it everything in life. I don't care if you're selling or not selling. One on one, one on five, one on 5,000. My advice to the kids was if you can be good at this, you're going to be good at anything you want. So I couldn't agree with you more. And I'm going to guess you worked your butt off along the way too. But when you love your job, that's easy. You just hit the ingredients that make people successful. Be dedicated, love what you do, be a great public speaker, and just work hard.
There you go.
Uh, 'Cause that's awesome. So obviously you've been doing this for a while, Mark, and I know you're trusted and relied upon to talk all things economics and economy. I'm sure you spend a lot of time getting people to not panic. Right now, we're in the middle of a war. And what do you think the implications of the war are? I'm on the camp, as you heard in the opening, that unless oil stays higher for longer, and I don't think 100 is the problem. I think 120, 130 would be the problem, but I'd love your opinion on that. But more importantly, you're setting up for a midterm election with, I think, 8 or 9 million people were protesting President Trump this weekend, which, let's just be honest, we know half the country's voting one way, the other half is voting a different way. I don't know if it's ever been more clear than this, but I love your thoughts on the war, the implications of higher oil, and where we are from what it means for midterms.
Yeah, well, for starters, we've been here before. This has been going on for thousands of years. Tends to happen in places in the world where there's energy. Tends to happen in places around the Middle East, right? So my
Yeah.
point is your clients have seen this. Your clients and markets have done exactly what they always do. The oil spikes, the broad market sells off, and I agree with you. I mean, I think it's been a pretty modest reaction to markets. I mean, you're basically lost whatever you made maybe from mid-December on because we all forget the first 2 months of this year. We're strong markets. So, I mean, we've pulled down from the highs quite a bit. But the start to end experience, kind of the Rip Van Winkle experience of if you went to sleep on New Year's Eve and you woke up today, your 60/40's down a few percent. So, I mean, the markets haven't had that big of a reaction. Obviously, oil has. I think you're right about the 120. You can see it in the futures market a few times. We hit 119.50, I think. Market backed way off. I think there's this magic that associated with that number of, well, 120 equals recession, and maybe it does, but you'd have to stay there for such a long period of time, well, at least longer than this. So I think I don't know if I have any bigger insights or broader insights than most people. It all comes down to how the duration of this thing, and you brought in the midterm elections, and Americans, apparently, with all the analysis and all the talking that we all do 24 hours a day, it's the price of eggs and the price of oil. That's how you vote, right? And midterm elections are around the corner. And if Americans are paying this much, it's going to have an impact. We've already seen it having an impact on any special elections that are happening along the way. So the duration, and this administration's been pretty open that this is not going to be a years long kind of event that we've seen recently. So I think it's all about when does it wrap? I don't know if wrap up's even the right term, but when do we get done with this? And the move off the bottom could probably be pretty dramatic. We saw it. You referenced it the other day. Last week, you had that 1,000 point move in the Dow pretty quickly. So it's all about
Yeah.
the duration. 120, I think, is the first stopping point, but we'd have to be there for a while. And it's just hard for me to see us staying at that point for a while because everybody knows the clock on the midterm elections and knows what the result will be. If Americans are paying $4, maybe in the state of Washington, you're paying $5.50 for a gallon of gas. That's going to impact the way you vote.
That's a great, you hit on some critical. We looked at when people overspend because of gas and when they don't spend. But one of the things I'm struggling with, if someone's going to drive to East to dinner and they normally go 100 miles and it was going to cost them before this, I don't know, $50 to fill up their car. Now it's probably 75. Does that really stop people from driving? I mean, it might have an impact on an airline seat a little bit, but is there a number in your mind or how long it's got to be up oil to really change consumer behavior?
Yeah, I think it has to be months. Yeah, in the short term, I don't know if it changes people's behavior or not. And, you've got tax return season coming in, and I don't think people are running out. You're right. If maybe if they had a trip they were planning, they're putting a little bit of a pause on it because you see it showing up in prices of airline tickets. But I don't think it shows up in everyday life yet. Now, what's that magic number? Is it 3 months? Is it 6 months? I don't know. It's longer than a couple weeks, and it feels like
Yeah.
we've been involved in this situation for a longer period of time. It really hasn't been that long yet, right? So I don't know when it is, but I don't think consumer behavior changes that quickly. To your point, and by the time it probably starts impacting most people, I would think we would be wrapping this up again for not for different reasons. One of them, again, being politically driven because it's midterm
Yeah.
election year. Yeah.
We did see sentiment come in a little bit soft, but not the end of the world. I mean, I think we sentiment, I think, is much more about politics than it is
I
actual reality.
totally agree with you on that. In fact, I think in my career, this might be I don't know if I've ever seen sentiment this low when people are making this much money in the markets right now. Of course, back yourself up to before the war, and I think it's all being politically driven. And again, you and I, we travel the whole country. We see both sides of the political agenda and everything in between. And to your point earlier, I mean, you're right. Half the time in life you win elections, half the time you lose. So you're either like what's going on half your life or half your life you don't. And this time, if you like what's going on, you probably really like it. But if you don't like it, you really don't like it. It's much more polarized. And I think that's what's coming through in the sentiment numbers. It's folks' political views, maybe more so than anything else. And again, usually sentiment's up when the market's up because you're happy you're making money, and it's down when the
Yeah,
market's down. This difference in the two to me makes I think it's much more politically driven than it normally is.
I think so. I feel like we're in the middle of an economic experiment, and I'll give you an example. The bill is going to have a profound impact, I think, on U.S. economy. And the reason why is right now, people are getting tax refunds that are up 10, 15% from the prior year, and yet that hasn't changed their sentiment towards the U.S. economy or their own pocket, not yet at least. What do you think about the bill and its impact on one tax refunds? But more importantly, do you really think we can get an industrial renaissance here? I feel like one of two things happen. Either the bill has a bad impact, we balloon our deficits, people we don't get an industrial renaissance, we don't see consumers getting stronger, and we're worse off than we were, or we go from 12 million to maybe 15, 16, 18 million jobs in the manufacturing sector. We get a rebuild of certain types of manufacturing, which really kind of course correct American economics. I really think we're in a really interesting point in time in history, maybe one of the most fascinating of my career. And now one of these two is going to happen. We either end up looking like Europe or a new version of the United States because of a big impact of this bill. Maybe I'm being dramatic, but I'd love your thoughts on the U.S. economy and its potential to change here or not in the next 2 years, 1 year, 6 months.
Wow, there's like 30 minutes worth of questions there.
Yeah, sorry.
That was like an 8-part SAT question, I think, coming in there. I mean, I'll always, I mean, I'm a father of 3 kids, two in their 20s, one in their 30s. I'm always optimistic about the future, and I'll vote on the new America maybe versus going the other path. I mean, I think the U.S. economy is in okay shape. I mean, earnings look good. Now, part of that is because of this new technology, and that's what we do, right? I mean, the U.S., I mean, we are technological leaders, and every technology over time has created more jobs. Now, maybe this one's different because of its impact with AI and impact on jobs, and I guess we'll just have to wait and see. But I'm always going to take the side that it creates more opportunities and more jobs. What you talked about in the energy space, that's how you transition from one energy source to the other. It's not by telling people to use less of what you have. You don't tell factory workers we're going to turn off your air conditioning because it's not energy efficient. You make the air conditioning more efficient, right? And what you're talking about in the batteries, that's the way that you continue to move forward. On the industrial revolution side, I think it'll be interesting. I do think we'll bring more manufacturing here. I just don't know if jobs comes with that, right? Because so much of it gets automated, and you're already seeing the pushback in communities. I travel a lot into the Midwest and communities and these AI companies that are building, and they're getting pushback, right? Because the energy costs might go up. The
Yeah.
labor's not going to be there after construction. Like, what's in it for me when it's left? And so I think a lot of that has to work out. But as far as the U.S. being a place that people want to come and do business, yeah, I think there are incentives that are in place there, and I think in the long run, I will always believe that technology provides more opportunity. The human beings in this, the human nature is we go straight to what sectors are impacted to the negative. Well, if we went back 25 years in our careers when, the internet exploded, I don't think any of us would have thought how much it impacts everything in our life now 25 years later. What does AI look 20 to 25 years later? I have no idea. But I
Yeah,
get
good
that
point.
growth and that innovation from the United States, and I can offset that by buying a lot of cheaper every other sector kind of large companies outside of the US. So I still think there's a role for non-US in portfolios. We like 2/3 in the US, 1/3 outside of the US. But that economic engine and that technology and innovation in the US, I think leads to more productivity and growth, which shows up in earnings, which helps markets over the long run rather than, I mean, I've seen all the movies, but I'm going to assume AI is not going to destroy humankind and all that kind of
The
stuff.
Terminator's not coming to get us.
There we go. So
I would tend to agree with that. Really, I do think that having less burden on corporations to be able to reinvest in the U.S. economy, whether it's AI or other places, is going to lead to newer, different types of technology, which I don't fear the job market. I actually think I think we are in the beginning of something really unique and different. But then, as an investor, for the folks who listen in, do you make your bet on U.S. stocks or non-U.S. or a bit of both?
Yeah, and I always like to tell people the US is about 65 to 70% of world market cap at this point, which is incredible, right? And if you look at the last, 100 years of the US market, it averaged what? 11, 12% a year. I mean, we've been a phenomenal economic story. I still think we're the best economic model in the world. So I think two-thirds, one-third is almost, that's the right starting point. It's not 50-50. I mean, it's two-thirds US, one-third non-US. And then you just kind of turn the dial up and down and you deviate there where you see opportunities. Now, the last 20 years in the US has been phenomenal. And you and I both know what we've seen in most of our careers. If you win for a decade, you don't win the next decade, right?
Yeah, for sure.
Japan
Yeah.
was the thing when I came out of school, and here 40 years later, I'm
Yeah.
finally excited to
You still
talk
own
about
Rock
them again.
Center. They don't own it anymore. I
Yeah,
agree with
we
you.
saw, we saw the decade of emerging markets, and then they were the worst asset class. So we know how this can swing back and forth. So I think two-thirds is right for the U.S. for the reasons that we talked about. Yes, we're a more expensive market, but we're built for growth and innovation. The rest of the world, a third outside of the United States, great, diversifiers away from technology. I get high quality companies in areas like finance and in healthcare, energy space, luxury goods. I can generally get them at a cheaper price. And the thing that people don't talk about as much, which might be the biggest driver in the short run, is I can get a currency hedge. And currency is always hard to talk about with U.S. investors because the dollar just rules the world. I think it still does in many regards. But the dollar's been strong for 20 years for a variety of reasons. It's probably going to either stick around where it's at or maybe weaken moving forward. The debt could be one of them. We can talk about that. But when that happens, my non-US stocks tend to do better. So there's a variety of reasons to at least have something outside the US. But I think two-thirds, one-third is kind of a good starting point of exposures. And over the last couple of years, people are finally starting to see the payoff of owning something outside of the US. Remember, we're only 4% of world population. It's kind of incredible. And we're
Yeah, yeah, we
25
dominate
and
yeah,
we're
we
25% of the world's economy. So, I get
exactly.
75% of the world's economy and virtually all population. I think having a third of my money there is not so crazy.
Yeah, and as the U.S. consumer goes, the rest of the world goes. We know
Yep.
that. But then when you get this scenario and you hit on a little bit, we seem to be aching for the Fed to cut interest rates, but the size of our debt clearly suggests that may not be possible. And actually, one anecdotal point before we actually get there, you hit on something that kind of strikes a nerve with me. I am a bit concerned about the number of stocks traded today continues to go down, especially internationally, but even so in the United States. You worry at all that with the stock market you and I grew up with is much smaller today than the one we have today? I mean, it was bigger when we grew up, many more stocks traded. Is that something that I worry about the long-term implications of that? In a quick second, what do you think of that?
Yeah, I mean, I think it's something to keep our eye on. You're right. I mean, the number of names have dropped by literally by the thousands from what we grew up with. Between that and as well, it's just with technology, with the ability to just put trades on so quickly and markets reacting so quickly. I mean, the whole technology and what does the market look like and the shape of the market, I think is something that a lot of us, particularly that have been around, it's on our horizon, but you can't really change that. So we'll just have to wait and see how it plays out from a liquidity standpoint.
One of the weird
Um,
things I worry about that there's not enough stocks for the average investor who wants to get in on a donut lab that's not publicly traded, something like
yeah,
that.
yeah. Yeah, your
So,
point about the debt, that's one of those things, it's not a problem until it's a problem, and then it's a really big problem. And again, for most of both of my career and mine, people have been worried about the US debt, right? And yet here we sit at, we've seen a 50,000 Dow. We're seeing the interest rates on the 10-year at, 4 to 4.5%, 2% lower than their long-term average. With the trillions of dollars that, to take the politics out of it, both sides of the aisle spend more than we bring in. They just spend it
yes.
on different stuff, right? So at what point does does it matter? And I just think the US is just different, right? I mean, we have so many advantages from the economy size, from being the reserve currency, 80% of world trade still done in the dollar, oceans on both sides for defense, lead energy, innovation, as we've talked about. I think we get a longer runway. Now, that doesn't mean that we get a get out of jail free card forever. I just don't know when the rest of the world demands. We both keep hearing the people are going to demand a higher interest rate for US debt. They haven't so far because it's
Yeah.
the biggest, deepest, safest market in the world, and there's nothing of size to take over that role. So until that happens, which could take decades, I just think, again, we're blessed and we get away with it. Now, that being said, it would be really good to start chipping away at these deficits, why we still are in this position. But we know how politicians work, right? They're going to wait until it's an absolute crisis to deal with it. And quite frankly, as voters, we do too, because we know the answer. And you're going to either raise my taxes or cut my benefits. And who wants to vote for that platform? So we're all part of the kick the can down the
Yeah.
road. And I just think making comparables between us and an emerging market economy or somebody that's had inflation, very high inflation scares, we're just different, but it doesn't mean it doesn't become a problem at some point. I just don't know what decade that is. And in the meantime, you've got to be invested because you've got to deal with longevity, which is really the thing I think people need to be thinking about much more than what's going on a day-to-day basis.
Without a doubt, it's one of my biggest concerns is for every $5 we make, we pay $1 on interest rate payments.
Yep.
That's why I don't think the 10-year comes down a whole heck of a lot. The Fed, I know would like to cut, but leaving our oil aside for a minute, second half of the year, maybe you get a cut if things normalize and go back down,
Right.
depending on where inflation sits. But to your point, I think the dollar being 70% of all oil is still traded in dollars. So we know we're still the safe haven currency. But at some point, it does matter. And I think the biggest thing, if they could just tackle Social Security, you hit on longevity.
Hmm.
Let's just raise the age you get it. And maybe
Right.
not for people in their 60s, but people in their 20s and 30s, instead of getting at 60, make it 65. Do some things where age adjust some of this stuff. If we could do that, it would solve a lot of our problems. But we seem incapable of not spending more than what we
Yeah.
make. And
It,
it creates higher interest rates. Inflation's not
And it's
terrible.
such a hard one to politically nuance, right? Because you're right. I mean, what's the answer? You whack our kids, right? I mean, look how young our kids are. They're going to probably live to be 120. But if you tell them in their
Exactly.
20s, here are the rules, they got 100 years to figure it out. So you phase it in. You do things like you're talking about. You raise the
Exactly.
age. Now I'm 61, so watch where you make the cutoffs there. But you raise the ages, but you give such a warning. The problem is that is a politically nuanced answer. And we all know the last time we made an effort with this, 20 minutes later, what did we see? The pushing the grandma over the cliff ads, right? Politically,
Yeah.
it is so easy to say the government's taken away your Social Security and then it all dies. But there are ways to fix this. You just have to phase it in over a long period of time, which is really hard when you get elected on a 2-year, 4-year, and a 6-year election cycle to solve a problem 20 years down the road that somebody else is going to get the credit for. Again, it's just the human nature of how we
That's
work.
the human.
Yeah.
Yeah, exactly. And I do worry about it. Would hope that we get to a point where we can maintain our current spending and grow the size of
Right.
GDP so
Right.
we get to a debt to GDP ratio that's back to zero on an annual basis, at least. We'll see. I mean, those are all things matter for Kevin Warsh, who's coming in. I think it's pretty difficult for him to make a decision about cutting rates when, as of
Yeah,
now,
I think hold is the new up. Yeah,
yeah,
I mean, to your
hold is.
point,
I
I
like
don't
that.
think they're going to be cutting, but I think it's a difficult environment to be raising, particularly because the oil numbers could come down so quickly 20 minutes later after you do it. I think holding is basically raising because otherwise they'd be cutting. Yeah.
So, what should investors be focused on? We got some turmoil here. Folks dial in to calm down and not get worked up. They listen to this podcast and they come away with my continued theme of don't panic. But I love your thoughts on what should they be focusing on, maybe besides the war, leaving that the kind of headlines aside. What would you, if you were helping someone think out where they should put their money, what advice would you give them right now?
I would tell him about my 92-year-old father, who I just took to his annual wellness appointment, which is a hilarious experience to be part of, watching the doctor and my 92-year-old talk about what things that you need to test for or not, right? Now, my dad has no history. My mom just passed at 90. There was no history of longevity in their families. They all passed away in their 60s, and here they are in their 90s. To me, that's what I think investors should focus in on. What happens if you're, I mean, most of us might say, I don't plan on living to be 92. Well, you don't know. So why don't you plan for it? And that's 30 years or so into retirement, or at least 25 years into retirement. That's what you have to look at, right? Markets go up 3/4 of calendar years. The markets will do their jobs. We've all, I mean, yes, wars come. And again, I don't ever want to minimize war. I mean, I have military in my family. I understand the drama and the anxiety with wars. I'm just looking at it from a market perspective. But we've all seen the long-term charts. We've all seen the things that we've lived through in our lives, whether it's been recessions or market breakdowns or wars, things like that. and the market does its job over a long period of time. So you got to stay in the game, I guess is my message. And in 40 years, there's really only three things that I've learned. None of them like, well, you have to invest this way in order to win. You've got to have a plan, and most people do that through an advisor, but you got to have a plan. You got to stay in the game, and you really probably won't stay in the game if you don't have a plan. And where appropriate, where your assets are impacted by taxes, manage for taxes. If you do those three things, which you actually control, other things tend to work themselves out. So those are the three things I look at. And it's really that longevity issue of, are you really prepared to live that long in retirement? And how do you have to plan for it? You got to stay in the game. You can't get out when you lose an election. You'll be out half your life, no matter what side you're on. You won't make enough money in order to deal with longevity. So no matter what action you might want to be taking, and it's okay if you want to tweak it a little bit. Just don't blow in and blow out of markets. Because if you get out of markets and think that rationally, when the market drops, I'll get in, we both know as human beings, we won't do that, right? Because whatever causes the market to go down, you think will last longer and be deeper. So stay in the game, have a plan, and manage your taxes is really what I emphasize mostly with end investors. And I just use markets that are going on to talk about things, but that's really where I get to at the end because it's really the only things we control. You and I don't control what the Fed does. We don't control when this war started. We don't control when this war ended, but we control those other three things.
Yeah, I completely agree with you. I would say for folks who have listened, I try to make the stress one, don't panic. Never a bad idea to dollar cost average, by the way, to kind of
Absolutely.
smooth out some of your returns. And then most importantly, markets are up 3 out of every 4 years. So if you stay in it for the long term, I'm always an advocate of being more aggressive on stocks if you've got time on your side. My personal formula is risk plus time equals reward. If you just do that, then to your point market, we grow. And you're part of the greatest economic experiment ever. If you look at the debt of the country divided by the total net worth of the country, we're some of the lowest levels of our lifetime at the consumer level. All consumer debt divided by all consumer net worth, it's one of the best levels ever. One thing I picked up over the weekend, I love your thoughts on this. There's a lot of the Bernie Sanders moment, right? And I get it. People have both sides of the aisle. I love going to Vermont. It's the worst economy in the country, by the way. Very aggressive on taxes, not pro-business, and he wants to tax folks who are wealthy. On the contra side of that, the top 10% pay 85% of American taxes. And we do have this scenario today where we're in this kind of K-shaped world where the most wealthy are the people over the age of 65. Markets have gone higher, houses are worth more. How do you think this gets fixed? I mean, there's the Bernie Sanders crowd that are upset. There's the wealthy who pay all the taxes, but there's some narrative in the middle where all the wealth is sitting with one group of folks, and I think the other folks would like to be more wealthy. Why do you look at that scenario of K-shaped and so on?
Yeah, I just don't, I don't know. I mean, eventually, if you're in markets, you're going to continue to grow. And I don't know if it ever kind of gets away from that. Now, what I do think makes us a little bit different in our system is, and I mean, I grew up from a very modest income. I'm blessed to do what I do, and I'm blessed that we do pretty well as far as what this profession does. Everybody has a chance here, right? And in some systems, you don't have a chance. So I still think we have the best model. I still think there's going to be inequality. I don't think, no matter how you slice and dice the tax package, again, I don't think we have what's the saying? I don't think we have a revenue problem. I think we have a spending problem, right? I think you have to work on the spending side of it. And there's revenue, there's enough revenue, and so maybe this group pays more, this group that pays a little bit. I mean, you can sort all that stuff out, but with the amount of deficits that we're running, you can't be running trillion and a half dollar deficits year in, year out. I mean, that just has to be worked at. So I think there's more emphasis on the spending side. You can make tweaks to the tax system on the earnings side, but I think you're always going to have inequality to some degree or not, no matter what
We've
economic
always
model you
had it.
look
It's
at in the
always
world.
been there.
It's always
Yeah.
had it, always been
Yeah.
there. Yeah.
I think the one thing I come back to is the byproduct of the federal government spending trillions of dollars from 2008 forward, with folks with hard assets like homes and stocks, whatever, went up a lot more. But over the next 20 years, 15 years, all that money's going to go from one generation to the next. So I think the wealth does get distributed greatly, and we're a better, stronger economy for it. The same token, wages are up 8 of the last 10 years, and the U.S. consumer I think it's in pretty damn good shape. Look, you and I grew up with 6% unemployment. Today we're at 4.4.
Right.
Grew up with 4% inflation. Today we're at 3. So for all the talk about bad it is, I agree with you. Final thought before we do something fun and wrap us up today. This has been a pleasure. You and I could talk for hours, by the way. There's so many more things I'd love to have a conversation with you about. But, for the folks who listen every week, what if there were lessons about investing from Mark Eibel, what would you want them to remember about your time with me today?
I think, you and I do a lot of presentations. We use a lot of exhibits. And what I do with exhibits is I go, these aren't charts anymore. This is your life. And for clients that have, I mean, look what you've experienced just in the last 20 years. Oh, wait, meltdown of the system, right? US led crisis. The market got this close to going right over the edge. Then we have a global pandemic 12 years later, right? I mean, we're in our homes, we're trying to figure out how to do our jobs, how to educate our kids. I mean, totally isolated and shut down, right? I mean, these are dramatic events. Look what markets did afterwards. Look at how you behaved during them and what would you have done differently. So it isn't just you're looking at charts about, oh my gosh. I mean, I can't imagine being an investor post World War I or post World War II, where systems are just absolutely annihilated, right? I mean, economics, countries are just, I mean, in shatters. And yet we come out of that, we come out of those situations. So anytime you see a long-term chart, find the year you were born on it and then just look at all the things that you've experienced in your life. I always believe the sun will come up the next day, and one day I'll be wrong. And quite frankly, no one's going to talk about what you and I say today on whenever that day happens, right? So it's just that you got to stay in the game and assume that, things will get resolved and that we move forward from here. I mean, that's really what I've learned. And you don't have to just listen to us and others. Look at your own experience of '08 and 2020. I mean, these were dramatic events in people's lives that are in their memories. You don't have to read about them, you experience them. What did markets do under two very dramatic scenarios? And it kind of puts, no matter what the policy is going on either side of the aisle, maybe it'll put it in perspective. Like in the short run, is this policy really like going through a pandemic? Is it really like going through maybe just kind of have some perspective and take a breath and remember again, what if you're the 92-year-old going to his wellness appointment? I just think some of this, and you're right, dollar cost averaging is fantastic. I just think take a breath and have some perspective. It works with parenting and it works pretty well with markets too.
I could have said that better. You were spot on, right? Be an optimist. U.S. economy grows. Perfect. I couldn't agree with you more. This has been a lot of fun, buddy.
It has been fun.
The last segment of our show, a shout out of the week. One thing I try to do here is keep it real. We want to talk to the average person out there who doesn't do this every day like you and I do. I like to make it personal, make the fun, whether it's my kids or whatever, but also like to let you give a chance. Is there someone in your life you want to give a compliment to that maybe they'll listen in and be appreciative of it?
Well, I think I already have. It's my 92-year-old dad who
Yeah.
I'll be seeing later on today. He lives 10 minutes away from me. I also want to give a shout out to my youngest daughter and her husband, who's in the military, who's going to provide the first grandchild in mid-July. So shout out to Amy and Charlie for having a grandchild in the family. So new birth on one end and celebrating 92 years on the other end. Those are my two shout outs of the week. You started with your daughters, so I thought I would keep it in the
I
family.
love it. That's a very good one. I like that a lot. That's great. So, and to your son-in-law there, thankful to being in the military, and I'll give you mine. Mine are twofold. There's a lot of kids over there in Iran right now fighting for us. So if you, whatever perspective you have on this, but certainly let's keep them safe. That's my first shout out. You reminded me of that one. And the second one, I'm going to go back to where I started. I will just single out my older daughter. She raised $30,000 in her 4-year commitment to Miracle, and I'm very proud of her. She was sobbing at the end of the night. Her younger sister's going to stick with it, so next year I'm sure she'll be with it. They were together all night. They did at 18 hours of dancing and singing and fundraising. But at the end of the day, they did something for the world that was not about them, but to help the place out. And she was very proud of her time there. So my shout out would be to the Miracle organization for what they've done, to my older daughter, Luca Gianna, who put a lot of time and energy into this, and it could be more proud of it, but just not because they're my kids, because what these kids did is a really phenomenal thing at a time when, we all get a little worked up about stuff that's probably not super relevant. This was a lot of fun, Mark. I really enjoyed our time together today. You're obviously a brilliant guy, and Russell's lucky to have you. Good person. I think I come away with this. I can't wait till you and I spend some time together personally. But yeah, this has been a real pleasure to have you on today. Thank you, my friend.
Oh, it was my joy. Great way to start the week. So the rest of the week will all be downhill from here. This was fun. I appreciate the opportunity again.
You're welcome. Everybody, thanks for listening in this week. It is Easter week, and for those of you who are Christians out there, the Holy Week. I don't, I talk a little bit about my background, mom and dad from Italy. Maybe this is a week to if you're like me, a Roman Catholic or a Christian, maybe to reflect on all the wonderful things we've had in life and be a little spiritual this week. I think it's a good idea to do that. If you have your palm crossed and you want one, you let me know and I'll gladly show you how to make it. Take care, everybody. Have a wonderful week. I'll talk to you on real soon.